Welcome back. I really appreciate you joining me for Money Girl episode 878. I'm Laura Adams, an award-winning author, finance spokesperson, money speaker, founder of The Money Stack, a Substack newsletter, and host of Money Girl with over 43 million downloads. We're going to talk today about some of the changes that are coming up in 2025. And the Internal Revenue Service, or IRS, changes perks and contribution limits for various tax-advantaged accounts based on annual inflation changes. While the inflation rate has come down, it's still high enough to result in small adjustments that you'll be able to take advantage of starting next year. So this podcast will review 7 changes to various tax-advantaged accounts starting in 2025. So if you want to pay less tax and save more for a secure future, stay with me to learn more. So let's get into those 7 savings and retirement rule changes that will begin in 2025. So now is an excellent time to adjust your savings plan to take advantage of them in the new year. Number 1 is Health Savings Account, or HSA, contribution limits increase. If you purchase an HSA-qualified health plan, it could be through an employer or on your own, you can use one of the most tax-efficient accounts on the planet. It's an HSA. Your contributions are tax-deductible, and your investment earnings are never taxed if you spend them on qualified healthcare expenses. And as I mentioned, the limits are going up in 2025. If you're single with an individual HSA-qualified health plan, so it's just for yourself, your HSA contribution limit increases from $4,150 in 2024 to $4,300 in 2025. If you have a family health plan, so you've got a spouse or a dependent, somebody in addition to yourself on the plan, your limit increases from $8,300 in 2024 to $8,550 in 2025. Plus, if you're over 55, you can contribute an additional $1,000 to either type of plan, and that remains unchanged. So that's the case this year in 2024, and it's going to remain $1,000 in 2025. All right, the second change is that Flexible Spending Account, or FSA, contribution limits increase. An FSA is another type of medical spending account that allows pre-tax contributions. However, unlike an HSA, it's only offered by employers. So if you have a job where you have the option to contribute to an FSA, you can defer a portion of your paycheck to the account and then use that money to pay qualified healthcare and childcare expenses. Unlike an HSA, which has no spending deadline, FSA funds typically must be spent by the end of the plan year. It's known as a use it or lose it provision. For 2024, FSA contribution limits are $3,200, and they increase to $3,300 in 2025. The third change is that workplace retirement account contribution limits are increasing. Most workplace retirement plans, so we're talking about 401ks, 403bs, 457s, and TSPs, allow employees to contribute up to $23,000 in 2024. Based on cost of living adjustments, the limit will increase by $500 to $23,500 in 2025. Now, the catch-up contribution limit for those participants over 50 is $7,500, and that's going to remain the same next year. So that would give you a total limit of $31,000 for next year, for 2025. Those limits apply to pre-tax traditional retirement plans and after-tax Roth accounts. However, there is an exception for older plan participants that I'll cover next. If your company also contributes matching or profit-sharing funds, you and your employer's total contributions increase from up to $69,000 in 2024 to $70,000 in 2025. And if you're over 50, your total contribution limit, including catch-ups, will be $77,500 starting next year. So that's $70,000 plus $7,500 for the total of $77,500 for next year if you're over 50. Note that 457 plans have unique catch-up rules, so you want to confirm the total with your plan administrator for next year. Also, if you have a simple retirement plan, the contribution limits are different. They are $16,000 for 2024, but will be increasing to $16,500 in 2025. All right, the fourth change is that workplace retirement plans have new catch-up limits. While there isn't a blanket increase in catch-up contribution limits for every workplace retirement plan participant over 50, a subset of them will be able to contribute more starting in 2025. So under the Secure 2.0 Act, those aged 60 to 63 can contribute the greater of $10,000 or 150% of the regular catch-up amount. And I mentioned that is $7,500 for 401ks and 403bs in 2024 and 2025. So therefore, what we're calling the super catch-up amount will be $11,250 for participants in that age range starting next year. You can use that super catch-up rule starting January 1 in any year that you're age 60, 61, 62, and 63. So you've got 4 years to take advantage of the super catch-up amount. If you participate in a simple plan, the regular catch-up contribution limit for employees over 50 remains the same for 2025 at $3,500, but those aged 60 to 63 can contribute $5,250 for 2025. The fifth change is that Roth IRA income limits increase. If you've been listening to Money Girl for any length of time, you likely know that anyone with earned income, no matter your age, qualifies for a traditional or Roth IRA. However, there are Roth IRA income limits, and I'm going to review what's changing about them in just a moment. But IRA contribution limits will not increase in 2025. Unfortunately, they're going to remain the same, $7,000. That's what it is this year. That's what it will be next year. If you're over 50, you qualify for an additional $1,000 catch-up, giving you a total contribution of $8,000 in 2024 or 2025. However, the Roth IRA income cutoff will increase next year as follows, allowing more people to qualify for this terrific account. Single taxpayers with modified adjusted gross income, or what we call MAGI, above $161,000 in 2024 cannot participate in a Roth IRA. For 2025, the threshold gets raised to MAGI over $165,000. Married taxpayers filing taxes jointly with MAGI above $240,000 cannot contribute to a Roth IRA in 2024. That increases to $246,000 in 2025. So if you're close to the cutoff on that income threshold, be sure you understand, what the new limits will be so you can take advantage of a Roth IRA if that's something you're interested in. Number 6, SEP IRA contribution limits increase. A SEP IRA, or Simplified Employee Pension IRA, is a retirement plan for business owners, their employees, and the self-employed. This is the retirement plan that I have. Contributions can only come from an employer. Employees can never contribute their own funds to a SEP IRA. For 2024, contributions are limited to the lesser of 25% of compensation, or $69,000. But the limit increases to the lesser of 25% of compensation, or $70,000 per year for 2025. And note that SEP IRAs do not offer additional catch-up contributions. And number 7, our last change that we'll cover is solo 401k contribution limits increase. A solo 401k is a retirement plan for the self-employed without any full-time employees except a spouse. You can make contributions as both the employer and the employee in your business. For 2025, you can make solo 401k contributions as an employee up to $23,500. You're also allowed to contribute up to 25% of compensation for the employer portion. But the aggregate contribution limit will be up to $70,000 if you're under 50 and $77,500 if you're over 50. However, those between 60 and 63 can have aggregate contributions up to $81,250. So that's $70,000 plus $11,250. So that's the super catch-up amount. You can contribute up to 100% of your compensation if you don't exceed those limits. Now, these aren't the only IRS changes for 2025, but I wanted to highlight several here that are likely to affect most Americans' tax advantage savings and retirement accounts. I hope this has been helpful, and I hope it will get you thinking about maybe contributing a little bit more if you're able to in 2025. I really appreciate you being with me. If you're getting value from the free content we love creating, please subscribe and consider submitting a 5-star rating or review wherever you listen to podcasts. And if you have a question about money for the show, please leave it on our voicemail at 302-364-0308. You can also send me an email and sign up for the free Money Stack newsletter when you visit lauradadams.com. That's all for now. I'll talk to you soon. Until then, here's to living a richer life. Money Girl is a quick and dirty tips podcast, and we have a terrific team. Steve Rickyberg audio engineers the show. Brandon Gatius is our director of podcasts. Holly Hutchins is our digital operations specialist. Morgan Christensen is our advertising operations specialist. Davina Tomlin is our marketing and publicity associate. And Nathaniel Hoops is our marketing contractor.